Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic day. Let's take a quick look at Bitcoin leading into the weekend here. It's Friday. As per usual, we're seeing a green Friday so far. Actually, technically not. We're down 0.5% on the day, which is crazy when you think about it. But the truth is, it's people are starting to FOMO in, kind of start buying in, so to speak. Totally understandable, absolutely spot bag worthy. I get it. But be very careful taking leverage trades into the weekend here. We've had 7 out of 7 or maybe even 8 out of 8 weekends, depending on how you count back through this year so far. Every single weekend this year has been red. So please recognize there's probably not going to be much of a change here. They're pumping up the price action on a Friday. What do you know? And then of course sometime tomorrow or Sunday we'll probably see that corrective behavior. So just be mindful of that. Statistically, we're more likely to see that. However, statistics don't always mean a lot. I mean, what, 25% of statistics are made up on the spot? So obviously that changes things. Do me a favor though, before we get started, hit the like button, comment below. We'll go ahead and double check a few things here. We're going to start with liquidation levels first and just kind of recognize that the macro liquidation has been half swept. So it's reflected on charts. If you saw that before, there's a liquidation as low as about 76,000. We came down to about 78K. So there's still a chunk of older longs here. Basically, these are longs that were taken roughly 2 to 3 weeks ago. Okay, so a lot of those low leverage longs are essentially getting swept now, or had got swept. We may not see that happen at all. I mean, 84,000 plus, we might even not even come back to that level. The reason why I may think that is just based on the simple fact that we have swept the CME gap. So I'm going to jump onto that really quick so you can kind of see it. If you're not familiar with the CME gap here, again, it's not fully swept. 77,900 is the actual level, and CME futures only came out down to 78.5, so it's mostly done. But for the most part, when those CME gaps are fulfilled, the price does have a tendency of reversing itself. I'm not saying we're just going to bounce off this level because of that, but the truth is we came really close to this previous all-time high territory. So the bottom might be in here tentatively, but I want to emphasize caution. Don't think that for the moment. I'm still leaning more towards a short in the 87 to 90K range. That's kind of what I mentioned yesterday, even though the price never recovered to that level, but we're almost back to it already. It's a crazy, crazy market. Either way you look at it here, liquidation delta hit a high of 40 billion. That is insane. We're down to about 35 now, tapering off, but we're still you still don't want to take longs. That's basically what this is telling us. It's not really the market to do so. It'd be irresponsible to take a long. Again, hindsight's 2020. I probably honestly should have taken a long at 79 to 80K. I dollar cost averaged like crazy between 79 and 84,000, so I'm perfectly fine with the price action pulling back. But on the same accord, we've got a lot of resistance above us here. 87,000 is some open interest locally. We can see 92K. I'm kind of rounding up a little bit there, and 95,000. So 80, let's keep it really easy. Let's just say 87.5, that's the center, and then 90, 92, and 95. So those are the three areas of open interest that we can see here on the charts. Once more, open interest accumulates at local highs, in this case on the way down. So we can presume when we come back up to this $87,000 range, we're going to see some resistance. That's essentially how it works. So that's the concept. All right, so now that we understand kind of that foundation there, CME gap swept, liquidation levels are still present, albeit half of them are destroyed there, so to speak. We should experience, or we should recognize that and kind of use that as a foundation, right? Put that in the back of your mind. For now, let's go ahead and take a look at a few other things. Daily time frame, we want to recognize that, we're not going to be bullish for a while, folks. We still got a macro descending trend while we're recovering nicely to our previous daily candlestick closure. That's fantastic. It still doesn't mean we're out of the woods by any stretch. So just know one good day here doesn't make you forget. You should never forget. And at this point, we can see RSI is still well under 70. That's under 30. So the truth is, anytime you're under 30 on the RSI, you do not want to take a long. When it breaks back up over 30, that might be a consideration for a long, but I think that's very premature at this point. We shouldn't really be taking any longs until we get back in the 92K or higher range. That's my personal feeling, just based on the SMAs, a lot of confluence with previous lows at 92.5, and essentially we got that resistance at 90,000 and tentatively around 87,300. So the macro here, just take my word for it. I look at this every single day. It's terrible. It's not going to be good for a while, and until it is, you shouldn't feel confident in taking a long. Again, add your spot bag by all means. I'm pretty heavy in the 84 to 79K range. But on the same accord, did I feel comfortable taking a long with leverage last night? Of course not. Things were dumping. It's crazy. It's just not a good market for that. Having said that, though, we're shifting gears here, so to speak, right? We're back up over 30 on the RSI. We're trending towards 50. We get back up over that 50 level. That would put us in a position probably closer to 86, 87,000. We might be in a position to consider a long position at that point. I don't really think it's smart or advantageous to consider longs in that case, especially this weekend here coming up. I would love to see the price continue to pump to the 87,000 and probably just short from 87, 88K throughout the weekend to this 85, 84,000 mark. Again, these are just things I'm kind of thinking of for the moment. It's very tentative. You got to take these things day by day. And at this point, if you're just going to take a short in the blind, that's really not a good call. I'm going to always reevaluate when I get there. All that said, though, MACD is trying to converge, or just starting to converge. That's generally a good shift in momentum. RSI getting closer to 50, also a good sign. We're not there yet by any stretch, folks. So please don't think that this is a signal to go long just because we recovered what we lost last night. Until we get above some of these local highs here, there's no reason to consider any type of trade. We need to see a break of structure, and we haven't had that happen yet. Okay, so that's kind of where we're at on the 4-hour. Hourly time frame, I'm assuming, is going to be very similar here. We're still, lagging span still technically free and clear. The lower area of the cloud is kind of hanging out at this 85 to 86K range. So until we get clearly above the cloud here, I don't feel confident taking a long, right? So, I mean, really, we want to be in this 87,000 or plus range because we got our local high. We got a significant amount of order blocks there. There's a lot of reasons why taking a long position right now is just a bad idea. Again, if you watch it closely, different story altogether. I'm more so referring to just like kind of a set it and forget it scenario. You don't just take a long at 84K and take profit at 100,000. That's just not going to work right now. Between now and then, I think waiting just a little bit longer would be advantageous. I don't think it's a good conditions here just yet to be taking any trades. We can kind of see the trend line here working concurrent with that 50-day SMA as per usual. We're tentatively above that, but that's like a ever so slight consolation. Never trade on consolation, you trade on confirmation. We don't have that yet. Okay, so that's kind of where we're at there. I know it's not what you want to hear, but this being a Friday, the easiest thing I want you to take away from this is that Fridays are almost always zeroed out come over the weekend. So majority of the time there's green days throughout the week. We'll see Friday pumps oftentimes, and then once Saturday and Sunday comes around, the price market dumps. I removed it from my chart because it was kind of messy, but every single weekend this month, we've seen like a 5% correction on average from Bitcoin. And that's a terrible, terrible correction for altcoins. That's usually 10 to 15% on average. So people are getting hammered on the weekends, and we got destroyed on one weekend, and I'm never doing that again. Okay. Granted, it was only one trade, but it was still not really a good trade to take into a Friday, right? So be careful taking trades today here to the upside, even though the price is probably more likely to continue higher. Sometime this time tomorrow, it'll feel good, and then this time on Sunday, it'll feel very terrible. So just know statistically, we're more likely to go down than up this weekend, just based on how often we've seen that happen. It's really ridiculous. So anyways, those are the 2 cents I want to leave you with there. I'll post a playout chart on our Twitter, Telegram, and Discord that'll already be available for you here. If you're kind of curious, it's available here. And yes, this is the fifth dip this week, and it just keeps on keeping on. Check out Bitunix too, folks. Link down below. Between now and March 14th, there's a nice deposit bonus reward. Check them out. They're awesome. I hope you have a good rest of your day. Thanks again so much for your time. We'll see you soon. Bye-bye.